What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is October 24th of 2019. Well, folks, I hope you all are having a fantastic day wherever you are. And in today's update, we've got a few key things to discuss, but we've really got to talk about the recent price action in Bitcoin, the multi-$100 dip we saw on Bitcoin that led markets dropping around 7 to 8% in a matter of just an hour. So I want to go ahead, talk about this, try to provide some rationale on this, and we'll also try to discuss the bigger picture and all of this right after our quick sponsor. Our sponsor for this episode is CoinDeal. CoinDeal is a leading cryptocurrency platform that allows you to trade a variety of cryptocurrencies as well as deposit major fiat currencies such as dollars and euros. The team has decided to give away over 90% of their token supply to early registers. So if you register an account before November 12th, you'll be able to claim up to 100 free CDL tokens to do a variety of things such as paying down fees on the exchange. Outside of that as well, it's important to know that CoinDeal has opened up to the United States, allowing users from major states such as Virginia and Texas to register accounts. So check out the link down below in the description if you'd like to learn more and claim your free 100 CDL tokens when you register your account. Alrighty, everyone, so let's go ahead and take a look at cryptocurrency markets. To start here, we can obviously see not only that Bitcoin is down around 5.6% over the last 24 hours, but we can see that the broader space is down at the moment as well. Now, few things to note here. Again, as I'm talking about continued shifts in markets, we've obviously seen a drop in Bitcoin dominance over the last 24 hours, and you can see that reflected here on this list because there are some coins here that are below Bitcoin and are losing more than Bitcoin. But the vast majority here have lost less than Bitcoin over the last 24 hours. In fact, we've got one of our plays up here, Chainlink, top 3 leader on the market. But putting that aside here, there's two key things that I want to focus on before we dive into price. First off, market cap has come down towards the big even of $200 billion. And again, we talked about the possibility of this coming up. I wasn't 100% certain if it was going to happen, and that's why I was continuing to average in because my risk to reward profile has been getting more favorable as price declines. But along with that, it's double of what we had back here in the sense of market cap. So significant thing to keep in mind that we might be getting towards the end of this correction. And outside of that as well, as we can see here, altcoins sell off here, right? Altcoin market cap is actually still higher than where we were back in September. And this is being reflected in market dominance here. But I don't want to talk about altcoins today, guys. I know, you guys have probably seen we've been doing well on some of our altcoin picks. I don't want to sit here and talk about it. We already talked about it yesterday. I want to talk about those who are concerned for Bitcoin's price, right? And I really don't know what better way to say it than I think what I'm going to talk about today. And that is to really put things in perspective. Now, I like to look at the daily, weekly, and monthly chart, preferably weekly to monthly, right? But I want to go ahead and put myself in the shoes of most individuals because I know most of you out there probably, when you're looking at Bitcoin's price, because I see it on tweets that people put out, the trading view charts that people share, pretty much any way that I can discuss with you guys about crypto or anything, all the big social platforms. I know you're either looking at the hourly most likely, and I know many of you out there are looking at the 5-minute, and you're looking at these exaggerated things that take top to bottom on the chart, right? This would look like a flash crash. This would cause pandemonium in equity markets if you saw this, right? This crazy 7 to 8% drop in a matter of minutes. How could this happen? What went wrong, right? Well, the funny thing is about this, guys, first off, if you already know this, then you already know it. There was no fundamental reason this dropped. It's simply just large players in the market in a very illiquid market right now where no one's really trading, dumping and pumping price because they've got the capital to do it. In the short term, right? They can make these short-term movements. And they're trading against one another, as we've talked about. Their objective is not so much to get you to FUD or FOMO in. It's more of to get other whales who are trying to do the same thing on margin trading exchanges, right? Now, taking that into mind, right, let's go ahead and take it here to the daily. The reason why you should look at the longer-term time frames is you'll gain a lot of perspective from, looking at the longer-term view rather than the short-term one. And the major perspective I want to put into account is really two things. First off, our low here was around 44.4, 44.5%, right? Give or take, from top to bottom here. That's at the top of the wicks. That was there for a very short period of time. And then also down here towards the low that we set here on September of 26th of 2019. And again, a lot of people who are looking on the short-term time frame won't really consider this low here, right? That we started dropping from a higher range. So really the low here is only a matter of 2 to 3% worse than where we were in the previous low. So it's not all doom and gloom, right? It's not exciting to see it, obviously, but it's understandable. It's not that distant off. And the other thing that a lot of people do not factor in is even with this correction, Bitcoin is still the best performing asset of the year because over the last few months, we had a 350% rally in price. And that's extremely important to factor in, guys. We have not seen recoveries like this in most previous cycles of Bitcoin, let alone at this scale of market. We really need to consider the scale of market here, just how big crypto is compared to the previous cycles. I think it's absolutely important to factor these things in. And it doesn't make me scared because, quite frankly, this is kind of the driving point I want to bring to you guys, right? Of course, there is volatility in Bitcoin. Many people out there, I've seen in the comments we've gotten on the channel, a lot of people have said, I've gotten out of Bitcoin, right? I can't deal with volatility. It's way too, unpredictable and swings around a lot. And it makes me upset, but I understand it in a sense, right? If you guys do not want to deal with Bitcoin, if you don't want to be invested in this asset class too early on, it's too risky, that's completely fine. You can do whatever you want, right? I'm not going to force you to do anything. I can't give you financial advice. But there's a reason I've become immune to these kind of movements. There's a reason I completely understand corrections in Bitcoin. And there's really two reasons. One, because I understand I can step back, I can take a look at the historical chart for Bitcoin, and I know this kind of stuff happens, right? I understand these corrections happen, and we usually come back to retest the line of support here for the logarithmic chart, right? I understand these things. But most importantly, as a macro trader, I think I have a big, I'd say I feel very blessed because I have the ability to think about my different options. There are a ton of different markets you can invest in across the world. So let's think about where we could park our capital. That's my main job as a macro trader. Well, I could put it in a savings account where I'm going to probably earn 0.09% interest on average annually in the United States. Not really good return. And for those of you who are European markets, well, I hope you love the bank taking money from you when you put it in the bank vault. Well, maybe we could put it in equity markets, right? We could put it in stocks. Well, let's go ahead and, I guess, put money in a market that has basically been topping out since 2018 and has been on the longest economic expansion in history. I personally don't like to buy tops. Well, we could also buy properties. I've seen some great, studio apartments, 1-bedroom flats that go for 1 to 1.5 billion. I don't know who's really buying at those levels, and the Chinese money is drying up. Well, we could put it in some government bonds or treasury notes, and that's going to give us either negative yield or a yield that's less than inflation. Besides this, guys, right? There's got to be something we can turn towards. Well, there are two other markets that interest me: gold and silver, and we talked about them a lot on the channel. In fact, gold and silver have gone through nice corrections over the last few weeks, right? So, if you want to look at more, less volatile assets that are hedging assets, you've got gold and silver. Go take a look. If you guys don't understand much about them, research why people believe they're sound forms of money, right? I'm not against gold and silver, right? But for me personally, I understand through Bitcoin's history and through its technological capabilities and the ability to serve as an ultimate store of value for the 21st century. I am staying confident not only on Bitcoin, but this emerging asset class of cryptocurrencies. I think there's extreme potential in this technology. I'm not just saying that, it's where I'm most allocated out of any given market out there. And the reason I'm most allocated in cryptocurrencies is because I understand both the fundamental capabilities of it, which are going to be massively impactful over the next few years. I stand by that confidently. And along with that, as a macro trader, I have a nice mixture of understanding both the fundamentals and the technicals. I know that Bitcoin goes through these parabolic cycles and it has harsh corrections. Yes, it does, guys. And we have to accept that. especially if you're investing in a market that has been trading for less than 9 years. We just have 9 years of price action across exchanges. This is expected. These kind of things are expected. We haven't gotten a full basket of liquidity and different fiat on ramps and off ramps. We need all kinds of infrastructure that we still don't have in the space. Yet Bitcoin has been able to do what it has. It's been able to run smooth for the last 10 years, and its market has continued to set higher levels. I'm not really worried, guys. I'm very, very excited about where the future of cryptocurrencies are. Right, we came down to a support range that we've seen before back here, just back in May and June, before we had this parabolic rally. I've been averaging in. Yesterday, I averaged into some of my altcoin positions. But that's a key thing to take away, guys. Perhaps it's not just best to average into Bitcoin. Maybe it might be good to look elsewhere, to diversify a little bit. And also, again, as I mentioned, maybe keep an eye on gold and silver markets. Might be able to mitigate it, and maybe you can have, as I've talked about it, I don't think most people should have all their money in crypto, right? I'm not a financial advisor. I can't determine if you're going to do that. But, maybe 5 or 10% of your capital is in crypto, right? Half of it in altcoins, half of it in Bitcoin, whatever. It doesn't matter. You've got to determine that for yourself. If the volatility is too much, it might be that you have too much invested, all right? But for me, I feel extremely comfortable. I've adjusted to these swings. It doesn't bother me at all. I didn't feel any fear. I didn't feel, God, I got to sell my positions tomorrow. I actually added. You have to follow, in many cases, the opposite of your emotions sometimes in life. And markets are a great example of that. It's funny. There's a lot of case scenarios you can probably think about where, sometimes doing the opposite is usually better, right? So I hope that provided some comfort to you guys. I think you guys like when I provide these kind of, I don't mean to make them sound like lectures, 'cause I'm not telling you what to do, but just giving you, my 2 cents, right? And if Bitcoin keeps dropping, I don't know if I'll even have 2 cents. No, just kidding. I'm just messing with you guys. Well, interestingly enough, as we jump to some of the news here, finally, and this is not, I guess, the backed volume everyone was looking for, as Bitcoin did drop, we got crazy amounts of backed volume. So back to the new fiat on-ramp where people can trade physically settled Bitcoin futures has hit an all-time high and outpaced the last few trading days. So we saw a total value of Bitcoins being traded at 4.8 million, which is 653% from the aggregated trading volume of the previous 9 days. It's pretty incredible. But to be fair, that's still not a lot of volume. That's not the institutional level grade volume that we're looking for. So the news is very exciting to me, to be fair. And it is good to see that there's a growth in it, but I like to see growth to the upside in price. And then also I'd like to see vast amounts more. I want to see hundreds of millions, if not billions, trading on a daily basis. We did see, however, futures volume, spike up 65% day over day on about 8,100 contracts on the CME. But the real news here that I want to talk about, and this actually kind of plays into my point here about, finding where you can park your capital, right? As a macro trader, that is my one objective, is to find, it's almost, guys, to me, I don't really care so much about money, but I love the game of trying to pick what market is the best for me to be in. Like I want to be one of the best performers when it comes to investing, right? And trading as well. I guess you could mix that. I sometimes do a little bit of trading, but it's mostly kind of investing in these longer cycles, right? Well, as we talk about asset markets and the financial sector and traditional markets, the Fed, which was already on a continuous streak of doing repo operations over the last month since we first talked about repo markets and the problems brewing there, well, they have now decided to expand not only their overnight operations, but their longer term multi-week operations as well. So hear me out on this, guys. They decided to expand the overnight support from $70 billion. So basically, just to explain it, instead of doing $70 billion of treasury swaps where banks can basically swap treasuries for short-term cash, they have now bumped that up to $120 billion. About $20 billion away from doubling those short-term operations. And along with that, they expanded their longer-term operations to $45 billion. There has got to be something extremely wrong because we have not seen this kind of repo injection into markets since back in 2007 and 2008. There's no time in the last decade where this happened. No time. And this is extremely concerning to see the Fed mitigating in repo markets so extensively, where it's basically, in a sense, instead of having private markets doing this and finding an actual justified rate to speak to the health of the credit market, the Fed is interfering. It's interjecting with a free market economy, and this will never resolve the underlying issues. It just prolongs them. It builds them up like a bubble. And eventually, something's going to make it pop. It's going to get bad enough, right? So, again, a lot of people have been talking about this. What's interesting is that futures, I don't even care about it. I could just tell you if I had billions of dollars in equity markets, I would be concerned. I would be looking for hedges. And I'm not the only one. Ray Dalio, huge, major, respectable investors that I've followed for years have been making that switch. Investors, in fact, haven't really been buying up equities. It's been stock buybacks for the most part, as we talked about. And the United States is not the only place injecting liquidity into its economy. And this continuous China trade war with the United States, China as well is joining the bandwagon and has had its largest cash injection into the Chinese economy since January. And January, as you know, was, if you guys may remember, it was a while back now. Crazy how time flies. We talked about it here on the channel. In January, we had the largest credit creation in Chinese history. And to be fair, as the economy grows, more people, bigger economy, you're going to probably see larger credit injections. But it was pretty substantial. And we're seeing world governments, as again, we see a nervousness within the bond market, nervousness in equity markets. We're seeing massive cash injection, right? So this is not good to see. They injected over $79 billion, or 560 billion won, into the economy in 1 month. Right? So, I actually kind of misspoke on that. They did it through 4 sessions through Thursday. So, in less than a week. Guys, look, as I've told you all before, I'm not a doomsdayer. I don't want to sit here and say that the world's flipping over, but this is my point about Bitcoin. The reason why I think so many of you like the channel, which I admire, and for those of you who may not, watch it for this, you might just watch it because you want to hear what Price is doing and you want to see maybe TA. I don't do much TA anymore because I don't think it's good to get people thinking about focusing on short-term movements in Bitcoin. It is much more clear, it's much more reassuring and fundamentally understandable to invest in Bitcoin when you understand the macro perspective. If you're just living in the bubble of Bitcoin, if you're looking at the shorter-term timeframes, it's not going to make sense. To you, this correction is going to look extremely worrisome. It's going to be very scary to look at. And it's going to skew a lot of people away from investing in Bitcoin, right? The thing we need to do is have a fundamental understanding of both the technicals and long-term. We've seen Bitcoin has done stuff like this before. It has these corrections. But we also need to understand the fundamentals because the fundamentals do play a role in macro cycles. Anyways, I've rambled on enough today, guys. Hope you all are doing well wherever you are. Hope you all are having a great Thursday. And if you guys have something you want to say, leave a comment down below. Whether you agree or disagree, want to get a discussion going. And if you guys want to support the channel, you guys can support us. We're brave, verified publishers here on the Data Dash channel. And along with that, there's a ton of links down below where you guys can support the channel. Outside of that, though, I hope you all are doing well wherever you are. I hope you're having a fantastic day. Even with this market correction, I know it can be difficult, guys. Even if you're as, solid as stone investing in Bitcoin long term, whatever it is, I understand it can be difficult, right? But just know I'm staying confident if that provides any reassurance, and I'm in this market for the long term. I've been here at lows like 3K, and I also was here before 3K when it was at a bull market. It was going through the bull market at 1800. So we'll have to see, guys. All right. Hope you all are having a fantastic day wherever you are, and I'll see you all in the next one. Stay tuned.